Hello everyone and welcome back to the channel. My name is Brent and in today's video we're going to be doing an update on the Merrill Edge portfolio. I've been requested through comments, DMs, and all sorts to do an update on the Merrill Edge portfolio overall, the options that I have been using, and also the premium that we've been collecting. Like as a brand new investor or seasoned investor, what options am I actually running on for the best premium and the least risk? So with that said, if you guys enjoy the transparency, definitely go down below, subscribe, hit the thumbs up. I'm still traveling right now, so my setup and everything is fairly like out of whack. So appreciate the. I have a lot of downtime right now in the hotel room, so this is kind of where I'm able to record these videos right now. So yeah, let's go ahead and get into the video, and we're gonna start back on December 29th of 2021 because that is when I actually made my first sale, but I closed it really early to collect the premium just for a better option in the future, right? So back on December 29th, I sold three options I sold a put. The market was trading at like 457 or even higher. I sold a put option. Actually, I think it had been higher. I think the market had been at 460s, 470s. I sold a put option, which gave me the option to buy the S&P 500 at 455 if it fell. And that option paid me a premium of 94.04. So I applied that right up top. The next update here was that I received dividends from BTI of $73.27. Soon after, I received a dividend from First Horizon of $15 right there. I then had an option on my Tattooed Chef expire. I don't know how much premium that was, but that was back in December, so I didn't include it. Now here is where I closed my option. So the market had been kind of pulling back. So I didn't want to buy at 455 potentially, right? That was still a little bit higher than I really wanted to. There was a little bit of turbulence in the market with the Fed potentially raising rates. So what I did is I purchased back my option to sell my shares. Oh no, to buy the shares at 455. I did pay $25.95 to close it. So my overall profit from selling the option and then buying it back was $68.09. And then JEPI, which is a premium exchange fund right there, paid out a dividend of 184.21, so I included there as well. And then it was just all reinvested. I have another JEPI in like another account that paid out 92 cents. So, that's less than $1 right there. So no biggie. Then I still had my 300 shares here, right? I had sold. Oh no, I didn't have the option. I didn't have those available. But I sold another put option that just gave me the option to buy it once again at 455, and I collected a premium of 115.04 right there for selling that option to just pick it up at 455 if it dropped. And I sold two options on Tattooed Chef to sell it at $16.50. I collected $40.69 in premium on that option. And it looks like right here, my option had been assigned. So here's my option sale. We can see that the option had been assigned, I believe, around here somewhere. Let's see here. Option expired. Never mind. Okay, so the option for 455 had expired. So the premium that I had collected there of 155, I got all my cash back available. It became available again because I never had to buy those shares. So I didn't have to buy them. So I immediately sold the put option there at 453. So if the price fell down to 453 and closed below, I would have to purchase at 453. I collected a premium there of $1,030. And we can see here, I sold another option on First Horizon that had been in the previous month. I think I had a buy price of $14 or so on First Horizon, and I had sold an option on it back in December. It had actually closed above $17, and I was forced to sell the call option. So I got the equity there of nearly $1,700 in capital right there. I then had the option of SPY assigned. So here I was actually assigned 300 shares of the S&P 500 at 453. So immediately here, which was after this option right here, I sold for 135 900 right there. Or I was forced to buy it at that price. So I I acquired 300 shares for 135 900. And then the option on Tattooed Chef right here for 40.69 that expired, so I got to keep my shares, got to keep my premium, so nothing big there. I received a dividend from SPY for 972, so that's added into that line right there. And then I own those 300 shares of SPY, so I did an option sale. I sold a call option to say I would sell these shares for 454. I collected a premium of $211.04, which is right here. And that option goes on right here. It was actually assigned out. So somebody purchased, the share price closed at 454 on that date back on, looks like 22 February, maybe potentially somewhere around there. And I was forced to sell at 136 199.31. So there's about a difference there of what? Not very much. There's maybe $300 difference between the capital right there. So I'm going to go ahead and just put in brackets here that I collected about $300 in the difference between buying those shares and selling those shares off. So not a big difference there, but hey, 300 bucks. Then I collected another dividend from Jeppy of 154.48, which is right there on that line right there. That was all reinvested automatically there. Then here's where Tattooed Chef started to kind of come down. The market started to kind of fall a bit, so I kind of used this opportunity. I bought Tattooed Chef. That was my first buys back that was February. So early February, I purchased $905 of Tattooed Chef at $11.91. And then immediately after, I bought 76 shares. This allowed me to have 300 shares, and I immediately sold 3 call options, which would give me the option to sell those shares at the price of $17.50. I collected a premium there of $49.04. And then Facebook at that time, Facebook had been pulling back. I purchased some shares of Facebook, 9 shares. I paid out $2,141 and bought some Facebook shares. I then own those 300 shares of SPY. I didn't own anything, right? They were sold off over here. I collected that difference of $300. I had my equity settled, and I could reinvest it, right? So I sold a put option. That gives me the option to buy at 443. So that's much lower than my previous 444, I think, was my, where was it here? 443. Okay, I think I sold at 450, 450s, I think. I don't know. Let me see. Let me go down a little bit here. Yeah, I sold at 454 right here. And, I was completely out of the market with SPY at 454. I sold a put to buy it at 443. So that's nearly that's a $3,000 difference there. Just by not being invested. I saved myself all in $3,000. But here, I sold the option to buy 300 shares at 443. I collected a premium of $1,072, which is right there. I then got a dividend from Apple of 924 right there. At this time, the market had been falling kind of hard. So I said, you know what? I'm going to go ahead and contribute a little bit to the Roth 401 or the Roth IRA. So I put in $4,004.63. I then purchased another 100 shares of Tattooed Chef for $1,288, which is here on this line item right there. And that allowed me to have 400 shares of Tattooed Chef. I then got a dividend from Abbott, which is the last dividend looks like I received, of $4.23. And here we can see that my option was assigned to me. Those 300 shares were assigned at 443. So at 443, the options were assigned over to me. So I paid here, I paid 132 900. So you see up here, I had paid 136. Oh, I was paid 136,199 to sell them off, and I purchased those same 300 shares for 132,900. So that's a difference there of nearly. I'll just round this to three. So basically, $3,100 difference, right? That I kind of saved by not being invested at that time. There's a lot of volatility in there. So I was able to collect equity difference there of $3,100. And then after I had those 300 shares, I immediately sold the option to sell them at 457, which, the market had been really turbulent, pretty crazy. I had the option, I could have made a lot more in premium here, but I kind of went pretty high at 457. That's a big difference between 443 and 457. So here I collected $388, $388.04 in premium. And we can see here's the option sale. And then soon after, I purchased additional shares of SPY. Market had been kind of tumbling. So here I purchased $4,773.11 in the S&P 500, which is right there. I then bought the option back. Like, I closed the position. I said, this is actually the price on that 457 option dropped dramatically to 3 cents per contract. So I closed out the contract for $10.95, which is right here. I closed out the contract. I did pay $10.95. That means the difference in equity that I had the premium was $377.09. And then as soon as I closed that option, I sold an option again to sell my shares at $444. I was able to collect $1,183.04 in premium. So I still own the shares, and I was saying, hey, somebody can buy these for $444, and I collected the premium there of $11.83. And then, the market though at this point was pretty crazy. We bounced at 420s, but I went ahead and liquidated my JEPI. This was it was in the negative by like less than a percentage. So I hadn't lost money on this position because over the course of the last 6 months or so, I had been paid out nearly a couple $100 just in dividends alone. So I liquidated the account that was there for that cash reserve, and I immediately threw it into the S&P 500. So here's that purchase right there. I just exchanged some of JEPI, taken it away, and then re-added it to SPY. So that's kind of showcased right there. And then, I wanted to go further into SPY. That's why I did that. And then I purchased additional shares of BTI. It actually dropped below my cost basis, so I purchased 10 shares of BTI for $21.71, which is right there. And then market kept tumbling down to $215, so I purchased another $1,000 of BTI, 5 shares at $215, and then the market continued to kind of tumble down a little bit more, and that was on the 24th, right? So not too long ago, but the market dropped to 210 on SPY on VTI, so I purchased additional shares of VTI right there. So that was all the transactions going into the very end of February. So with that in mind, let's go ahead and bust out our handy dandy calculator, and we'll go ahead and cover the totals between everything, because I haven't done that yet. So we see the total premium that we sort of collected was $68.09. The SPY was $155.04. Tattoo Chef $40.69. Wait, something's let's see here. No, that's correct. Let's see here, $40.69. Then we have SPY of $130.04, and then $211.04. Tattoo Chef $49.04. SPY again at $1072.04, and additional $388.04. I did have to sell. I bought those shares back for $10.95, so minus $10.95, and then I sold the option again for $1183.04. So between January and February, I collected $4,186.11 in premium. And that was just the premium there for the last 2 months or so. The dividends that we received in the account are 1573.27, 184.21. Now I don't own JEPI anymore, so I'm not going to receive those nice gigantic dividends as I had been over the last several months. But that is okay. I'm going to earn it back in equity here. As the market recovers, I will move to the upside here over time. Let's see here, 48 plus 0.76 plus 9.24 plus 4.23. So in dividends, we made 451.83. And then, so that's, sizable amount. I think we made about $4,500, nearly $4,600 in equity just between premium and dividends. In the last, I could actually just add the premium on here. So 4186.11. So yeah, in total between premium and dividends between January and February, we collected $4,637.94. We did save ourselves $300. We acquired equity of about $3,500 to reinvest. That's how we were able to collect more SPY positions, just because we grew that equity from selling and buying through there. And then we invested in the market equity wise. So I'm going to put down here the total equity gain was about 4,600, I think. And then as much capital as we invested in the market, we did invest quite a bit, right? The market dropped, so it kind of gave us an opportunity. A lot of people don't take up that opportunity because they think the market's either going to continue falling. They kind of trick themselves out of making decisions to buy. So if you're not, people don't buy on the way up because they're always like, hey, what if there's a better deal? I'm going to start over here on the portfolio trades here. So 905.14, the 2141.86, the 1288.79, the 4773.11. Yes, I'm going to stay logged in here in just a minute, but where are we at? 477. And then we did have JEPI, right? I did sell JEPI, 159.44, so it's not technically new money there. And then I reinvested SPY, 161.20. And then VTI is 2171.60. And then we have another VTI 1075.64 and VTI, that last one, of 631.60. So total we invested in between 2 months is about 13,000. So that's the difference there in between the last 2 months. So we collected about $4,600 in total premium and dividends, and we reinvested about 13,000. Or actually, we didn't reinvest, but we deposited 4,000. So we reinvested a lot of the premium that we collected. So here's the breakdown of what we have right now. Equity wise, we don't have a lot of cash on hand. If I want to buy more, I'll have to add more money into the market. So we have about $2,300 and some change sitting in cash between the accounts. We have two options going on now. So we have the option on SPY, still open at 444. I'm gonna leave this one. It doesn't expire till the 16th of March. So we have some leeway. I don't mind selling SPY at 444, but we'll see how it kind of lands. It could go up or down still. And if this one turns positive, where I'm able to kind of exit the position while keeping the shares, that's fine. But if it does go up to 444 and I'm forced to sell, it's above my cost basis now. My cost basis on SPY is, let's see here. I don't have the cost basis on here. I think it's in the low, I'm only down 0.11%. So my cost basis is around 437 and some change. It's really close to where the current price is. So if it goes up to 444 and I'm forced to sell, that's fine. I'm only going to sell 300 shares. I'll still keep 72.96 shares of SPY, and then I'll do another put option on that I'll write another put option to sell a put option to buy it at a certain price. So that's what's kind of going on there. The positions that are open, I'm still owning Apple. About 7,000 of Apple. Abbott about 1,000. Facebook is my biggest loser right now. I'm down nearly 4,000 in Facebook alone. But this long term, I'm not worried about it. I'm thinking Facebook long term, VR, streaming, just overall, they're going to have some complications with the lockdown on Androids and iPhones, but they'll work their way around it, or they'll have other means of producing similar or better revenue sources. So no biggie there. Jeppy, I sold out of a large portion of Jeppy. I only own 2 point some shares of that one now. That was just mostly, I had 400 shares and I kind of liquidated it to move it in the SPY. So I moved the equity and I have 372 shares of SPY, 400 shares of Tattooed Chef, and that position is down, but that can change very quickly. This position at one point, actually it's not really negative because I did sell Tattooed Chef at about $24, $25 way back when it had peaked, and then I repurchased it I think at $20 or $18, and then as of that point it has dropped. But all in all, I'm not negative overall. It's just negative as of when I purchased it again. And then VU, I own SPY in the taxable account, but I don't own SPY in my Roth IRA or IRA because I can't buy 100 shares of SPY to do premium. But on VTI, it's really cheap at $221 per share. So here I'm able to buy over 100 shares. So I'll be writing some options on VTI to begin collecting premium on that one. And then Vanguard, I just own 40 shares of Vanguard there. So essentially between SPY, VU, and VTI, these are all ETFs that track the market, the S&P 500. And just kind of between those three positions, I have nearly 200,000. So that's the majority of these portfolios sits in the S&P 500. And we can see here, that Facebook right here and Tattooed Chef, they're kind of holding down the portfolio, but this is never truly, it's not truly lost because I haven't sold. If I had sold, the equity would be lost, right? But these positions I believe will recover over time, so I am not worried at all. So that is an update on the M1 Finance, on the Merrill Edge portfolio, over the premium, the positions that we've recently purchased, and the dividends that we've received. So yeah, if you guys enjoyed this video, the breakdown, the transparency, definitely go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time I release a brand new video, and leave me a comment down below. What sort of options have you been using? I mainly stick with SPY because it's really easy to kind of get an average of what your average return will be on a week-by-week basis. So I'm able to collect, $100, $300 per contract while taking very low risk or either buying below my cost basis or selling above my cost basis. So I've been using SPY pretty often for that. So let me know down in the comment section below, what options are you running and what stocks are you buying? Okay, have a good day, everyone. Bye-bye.